Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, October the 25th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis during the course of the RTH trading session. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So, taking a look at yesterday. Yesterday, we opened auction just inside of range. Our hypo 1 was an open auction, a move up into the 67 to 69 area, and then finding responsive sellers and rotating us down towards that 59, chopping around there and pushing down into the 56, and then finding responsive buyers and rotating us back up. Hypo 2 was the opposite, which was a move down first and then finding responsive buyers and moving up towards the 62.50. Hypo 3 is what actually played out, and that was a open test drive, failure to take out the naked VPOC, and then a rotation down into the 56 area, chop around here, and then fail, okay, and push down into the 49. And 49 was the extended target. 59 was the next big target below. Our daily ATR was at 56. So once we got down below 56, we started talking about this being hypo 3. So at that point in time, our main focus should have been on the push down into that 49 level and down into the possible 42.50, 43 area we talked about, which is our key line in the sand in our weekly downside ATR target. So it was once we, again, the reason we put the daily ATRs in place, and that's our first guide to tell us that we're going into a possible trend day. Now, this was a different type of trend day. We trended down, and then we trended back up, and it turned out to be a rotational day, just a normal variation day. But this first part of the day, all the way down here, was a trend day. I ended up taking this long. I had gotten short a couple places, but didn't hold long enough. And I took the long down here on the FUBAR Mr. Sneaky Tech Gap, and we'll take a look at it on the other chart. But this was actually, if you didn't catch the down move, this was the trade of the day. Problem is, I closed mine out at 47.50 because I was still thinking that we would likely continue the trend down, which was a reasonable assumption. But here's your three-wave corrective pattern. Okay, so we move up, we put in a higher fractal low, then we put a higher fractal high, and then another higher fractal low, and this gave you your three-wave corrective pattern right there. We ended up closing above the value of the microcomposite. Remember, the microcomposite VPOC was down here at 49, and then the value area high was the 56, and we came back into that 59 and a quarter where they accepted value after the breakout. A couple things I want to note. First of all, great trade. This Mr. Sneaky right here, we talked about it. I tried to take it. I didn't get filled. And, as we talked about during the time it was happening, that on a trend day down, when you're looking at a trend day down, you can't expect much on the FUBAR Mr. Sneaky, but you're going to take it because you never know. Now I tried to get the 53.50, 53.75, and it never gave me. Now, but if you would have taken it, at the open or just a tick above, you would have got funded and then you would have got stopped out. And that's what I was saying is that would probably be the case, but you still got to take it. I didn't get filled because I wanted to try to get the 53.50, 53.75, and comments were made. Well, you don't take them 100% of the time. I do take them 100% of the time if I can get them, and I just didn't get them. And I took this one as well, and I take it because it shows up, and because it's a mechanical setup, and because I have a running expectancy on it. I know it's got a positive expectancy with a high winning percentage. I'm going to take it. Now, I didn't manage it very well, and I made a note in my journal that I was visiting another room yesterday. Somebody I'm talking about the possibility of joining, and they were shorting the 47s, and I ended up closing my long at 47.50, and I never should have, because there is nothing, that was not allowing, that I should have let my runner run. So I wrote a big note in my journal that I got influenced by somebody else, which is something that can happen in this room too, because you guys are going to get influenced by what I say. But I didn't do a good job managing the trade. Now it was a good trade overall because I got long at 42.75. I got funded at 43.50. I took another one off at I think I took my other one off at 44.75, and then I let my runner run to 47.50. So it wasn't a bad trade, but the problem is I didn't manage my runner. I should have let it run because I never took any heat on this, and something that I'm going to be working on today. I know this isn't the typical pre-market session, but we've got some comments in the room, and I want to find a way to keep you guys on the right side and start thinking about it. And that's why I asked you guys all to do hypos last night. Because if you're not doing the work, then you shouldn't be trading. And everybody should be coming into this room in the morning with their own hypotheses, their own trade plan set up, and have done their homework, not relying on what I'm saying or what I'm doing, because you won't be able to react. And I think it was Jeff or Svet that made a very good comment yesterday that you're not as quick to react as Marvin and I are. Well, we're quick to react because we've already thought about what we're going to do, and we've been at this game, and we trust our setups, and we don't hesitate. And hesitation is what kills. Like, the person yesterday that took the, I forget where it was. It was a late trade, and they took it on the second retest, and they ended up getting stopped out on it. And I forget where it was. But the point of the matter is, hesitation and then fear of missing out got him in late, and therefore, he ended up having some issues. Anyway, let's get back to the homework. Let's take a look at the news. So the news this morning at 8:30 is we had continuing job claims. They came out slightly higher than expected, 93 versus 90. But the initial jobless claims, they came out less than as expected, 233 versus 235. We've got the ECB press conference going on right now. The interest rate in Europe did not go up. That's good for the market. They're holding steady on their interest rates. The big news, though, is going to be at 10 o'clock. We've got, in 45 minutes, we've got Bloomberg Consumer Confidence. At 10 o'clock, we've got pending home sales. we've got Kashkari speaking. I'm sorry, pending home sales in at 10:30. We've got Kashkari speaking and natural gas. And then we've got the KC Fed composite and manufacturing. And then 1 o'clock, we've got the 7-year note auction. Hold on a second. I just got to adjust the stop here on my gold. I'm running along on gold right now. Okay, so let's take a step back as we always do and just take a look at this macro to micro. I always use a simple candlestick chart. I use a 9 EMA and a 20 SMA. And sorry, I got to move my stop again here. Hold on a second. Okay. I use a simple candlestick chart with a 9 EMA and a 20 SMA. I'm looking at where we are in the time frame. Are we? Do we have good slope, good separation? Are we challenging the trend by breaking below the 9? Are we violating the trend by going below the 20? And where we are in each time frame. And I start with a monthly and I work my way down. I use my toss paper money with my live data. And I use this because I love their drawing tools for charting and Fibonacci's and chart recognition. Still one of the best tools out there. But it's no good for futures, so that's why I use the IRT for my futures. So trend is very much intact. The trend does not even get challenged until we get down to the 2433 area on the monthly. Going to the weekly, this is going to be a long session, I know it. Same thing, got good slope, good separation. Trend is very much intact. We don't challenge the trend until we get down to the 2527 area on the weekly. On the daily, now the daily showed some weakness. We had this week day here, and then we had this week day yesterday. But buy the dip buyer stepped right back in. So we came down, and we actually started to violate the trend, and we came down to our key line in the sand at 43, and we're not able to hold below the 43. And basically, they took back the majority of the day, giving us a bit of a hammer. We are sitting right on top of the 9. We've got some lack of, we're losing some slope, we're losing some separation. We're challenging the lower line of the upper channel that we've been in, but the sky is not falling. We're seeing some weakness coming in. This is usually the first sign of a possible trend change, but we can't expect it happen all in 1 or 2 days. It's they're going to test, the sellers are going to test, the buyers are going to protest, and there's going to be a fight. So right now the trend is intact on the daily. Going to the intraday, whoops, wrong one. On the intraday, we're seeing the possibility of a trend change. We've been sloping down through the last 2 sessions, the Globex from yesterday and yesterday's RTH, and then the Globex overnight has been weak. We are starting to try to take it back. We are above the 9, but we are seeing a contextual change here on the 4-hour. Going on the 1 hour, a little bit of a different story. We were trending down, and then they took it back, and we're starting to get the continuation of the upward trend, or the change of this downward trend to an upward trend. And then the 30-minute, same thing. We're back above the 9 and the 20. We've got slope and separation. Going to the 15-minute, same thing, but we're seeing a little bit of weakness here. But right now we're holding the upward trend, and then on the 5-minute, we're seeing some weakness again. So we're seeing some volatility, and this is actually good for trading. This is good action. Yesterday was good action. I took my first trade and it was a loss, but I started getting on the short side, and I didn't manage my trades as well as I'd like. I could have just got short. I forget where our first short was, and stayed short. But It happens. Sometimes you just don't uh, catch the whole trend because you're a little late on it. And of course, you're a little bit also hesitant with buy the dips crowd. So taking a look at the structure. Now, we came back and we traded down into this prior micro composite. So now I've changed my micro composite, my longer time frame micro composite, and I've included the breakout and the pullback. Why? Because we traded through the whole value and closed inside of the value. So I have to include it. Now I'm keeping the prior microcomposite, which is this one right here, and I'll bring that to the front because I still want to recognize where this balance was prior with that value area high at 56 and the value area low at the 44.75 with the microcomposite VPOC being here at 49. Now, we have a hammer. So the hammer is telling us that the sellers took control early and then the buyers wiped them out. So, if we get above the hammer, that is a positive sign that the longer time frame trend is going to continue. What we also have is the possibility of coming back inside of value below the 59.50. And if we get below the 59.50, we've got this wick. And I always talk about the possibility of getting stuck inside of the prior day wick, especially when they're big like this, because this is not properly auctioned. Okay, one side took control, the other side took it right back, but there was no consensus overall of where value was for most of the day yesterday. Now we closed back up in the 2-day micro composite where we accepted value after the breakout. Just a little bit of context so people understand this. This is simple auction logic. We break out of this longer term balance. We accept the value higher after the breakout at the 25.0475. Then we go into price discovery. Okay, then they find 2-day balance in around the 32. Then we gap up. And then we go into this long sideways consolidation, okay, and create balance with the acceptance at the 49. Then we break out of the value area, which was the value area high at 56, and we accept value higher at the 59, and then we go into price discovery, create balance. We tried to hold value up here at 73 on this day right here. 2 days ago, they shifted the value down to 68. And that was a clue that they were having trouble holding value at 73. And we said we'd likely come down and test this 59 area. They came down to the 59 area. That was our next big target below yesterday. And we said if we broke the 62, if you remember, go back and read or watch the video from yesterday. I said if we broke the 62, that would be a good short into that 59, the next big target that we had identified at the 59.50 or 59 and a quarter. But then we continued down. So now we've extended the profile, and now I'm watching the longer term value, and the value area high is at that 59.50, and the value area low is down here at the 43. And we've got the range high. So I'm watching the range high from yesterday, which was at the 65 as a breakout into the 68 and the continuation. Otherwise, I'm looking for them to chop around here and break below the 59. And this 59.50 area is going to be my over-under line. I'm actually going to move it slightly down to 57.75 so I don't get chopped up. And anything below 57.75, I'm on the shorts. And I'm looking for a move back and getting stuck trading inside of this wick here between the 57 and the the 45.75 area as we try to determine fair value between 53 and 49. So that's my overall view. Now let's take a look at the overnight trading session. Overnight trading session is about 50-50. It's pretty neutral. We spend a lot of time below, okay, and the open, and we also spend a lot of time above. So it's pretty neutral. We've got a double distribution. We've got the LVN and the midpoint here at 59.75. That's why I'm saying you can use the 57.75, but I just don't want to get chopped up. So I'm going to just be moving the 57, the over underline to 57.75, simply to take me out of what could be chopped in this low volume area from overnight that starts at the 61 and goes down basically to the 59. So 61 to 59 is going to be a chop zone as they fill in this area of the profile. Our VPOC shifted from down here up to here in the European session, and as we move closer to the RTA session, so the overnight VPOC is 61, our overnight high is 63 and 56. Now, the key today is we've got a very big news event coming up at 10 o'clock, so that can revalue the market. So we have to be prepared for all the different scenarios. Just like I said yesterday, we said, we saw some weakness coming in on Tuesday. Therefore, we've got to really consider the possibility of hypo 3 or hypo 4 as a trend day up or trend day down. So let's start moving our numbers over. Our overnight high is 63 and a quarter. Our overnight low is down at 56 and a quarter. 56 and a quarter, just one tick above that value area high from the prior balance area. And our overnight VPOC is 61.75. Our LVN is at 60. We have an LVN here at 59 and a quarter with the close at 58.75. So this will become a trade area. Our over underline, as I explained, I'm moving down to 57.75. I know this is pretty tight right here, but we've got to recognize the 59 and a quarter as a possibility. You can move it up. I think 60 is probably going to be the more accurate. That way you can get in and try to get funded before you get into that LVN. This is our over underline for the day. And there's no reason you can't use, the 60 or the 59.75 as an over underline. It would be a very valid. I'm just choosing for my own sake to use the 57.75 because I feel if we get back inside of this value, then I'm less likely to get chopped up, and I can take the move down into the overnight low and down into the naked VPOC as a way to get in and get funded on a short. So very simple. It's just a preference. It's not saying, well, the 60 area is not valid. The 60 area is very valid. In fact, you could use the 62 if you wanted to. I would move it up a little bit if I was using anything. I'd be using I'd move my 62 to 63, but that's enough said. Other levels we got to pay attention to, obviously, is the breakout. Above the 60, I'm looking for a push up into the 63, 64 area to test the RTH open from yesterday and test the range high. And any break above 65, I'm looking for a move into the 67.50. Down below, we've got the 55 down here, but we've already got the VPOC there. I'm going to put a trade level down here in the 53 area. Why? Now, usually I would do this at a low volume node. I'm doing this at a high volume node on a larger time frame. And the reason being is that right here, inside of this value, we've got a double distribution with 53 and 49 as the two prominent price acceptance areas. So I'm using this because we could bounce off of this, but if we don't bounce off of this, then we could push through into 49. And that's why I'm saying we took the first bounce off of that 49 yesterday. Why? Because normally I like to enter trades in low volume nodes, but in certain circumstances, you're expecting the first retest of that level to create a opposite reaction. You know, you've got high volume acceptance or high price acceptance between the bulls and the bears. So when this comes into the 49, those buyers are going to defend that and try to bounce off of it and try to and we'll get a bounce off it. And that's the difference between choosing your entrance into a trade at a low volume or a high volume node. Not going to get into that auction logic in here. I'm taking a lot of time on this pre-market session. So other levels, we've got the 53, and then below that we've got the 49, and just below that we've got the 47.50. I'm going to use the 47 because that's where that volume came in to start. And down below, then we've got the 45.75 as a target. Just going to move this out of the way for a minute. Because remember that 45.75 was the microcomposite VPOC before it shifted up to 49. And going below that, then we have the 45.25 value area low on the microcomposite. And then we have our key line in the sand is, I didn't want to do that. That's still our weekly ATR is still at 42.50. But I'm going to move my key line in the sand down to the 38.50 now. Okay, now our daily ATR is running at 11.11. That's a full session, average true range, 20 period. So off of the high overnight of 63.25, our downside daily ATR is at 25.67.25. No, that's wrong. That's the upward. 25.52.25. And off of the low overnight of 56.25, our upside daily ATR target is 25.67.25. Right at that naked close and naked VPOC. Critical mass. We have 2 sessions left in the week. We have today and tomorrow. Our daily 20 period ATR is running at 11.11. So our 2-day daily ATR is running at 22.22. So our week open is 72.75. Our weekly critical mass to the downside is 25.50.50. And our upside weekly critical mass is all the way up at 94.97, so it's not going to be a real issue for me today because we'd have to basically trade 35 points up to get the critical mass. So not going to be a factor. All right, so those are all our levels. Now, how do we take those levels and create a hypothesis? Well, when we talked about the overall day yesterday being a hammer, okay, I got to use my over-under line to guide me in terms of my hypotheses. So we're currently trading near the overnight high and near the range high. So, and the inventory is pretty much mixed, so I'm not really looking for balancing. I am going to give hypo 1 and hypo 2 pretty equal weight. So my hypo 1, because of the fact that we've seen some weakness, until we get above the 65, I've got to be thinking that we're going to get a rotational day and come down and get stuck in this wick. So my hypo 1 is an open auction, in range, out of value, a continuation to push up into the 63, and somewhere between 63 and 65 with a possible false breakout up to 67.50. Find responsive buyers somewhere between that 63 and 67 and rotate us down, take out the naked close, chop at the 57.75 to 60 area. That's why I'm using my over-under line down here, and then break below the 57.75 and come down into the 55 area and basically chop inside of this area and getting stuck in the wick and going sideways. Possibly seeing a composite VPOC shift from the 49 up into the 53. And that's going to give me a clue for tomorrow, but we'll get into that tomorrow. Hypo 2 is going to be the opposite of that, which would be an open auction, in range, out of value, a push down into the value, come down, and somewhere between the 57 and the 50 area, finding responsive buyers, spending a lot of time chopping sideways and pushing up into the 67.50 as the key target for hypo 2. Possibly even a late day push up into the 70. Hypo 3, because this is a hammer and because we have news at 10 o'clock, my hypo 3 is going to center around the news and looking for an open auction, in range, out of value, a push down into the 57, chop, base, start moving up towards the overnight high, take out the overnight high, and then based on the news, my hypo 3 is going to be a push up through the 65, take out the 67, chop between the 67.50 and the 72 area, and then push up and equalize the all-time high that was put in Globex at 77.25. And possibly even, how high we go, maybe up into the measured move on the 80. That's based on good GDP. Hypo 4 is the same thing. It's based on news, and it's an open auction, a push up into the 65, push through to the 67, chop around, news come out, and it's bad news, market reacts negatively, and it pushes down into the 55 area, chops in this area, and fails, and comes down and tests this 42 again, and possibly fail and push through into the 36 and get below that key line in the sand and really show the first signs of real pullback. And again, my pullback, gang, is not the sky is falling, the top is in. That's not what I'm saying. I'm saying the pullback is going to be into this low volume area down here, and a large amount of the next few weeks being stuck inside of this low volume as we chop and mature the auction and determine fair value in this area between the 25.50 and the 2500. So those are my four main hypotheses. I know I took a long time today. I'm trying to get you guys to think in terms of how the not what are the hypos, but how the hypos are being formulated and what the thought process is and what I'll be looking for during the course of the night. I'm going to really quickly just go into the gold. I'm long gold right now. Actually, no, sorry. I'm out of gold. I took my stop out. I moved my stop up too close, I guess. But that's okay. It was a good trade. So here we are. Move the profile over. Let's see where value is. Last couple of days, we're creating a base here at the 75. Nothing changes. Okay. If we don't hold the 72 area, I'm thinking that they're not finding the buyers at the composite VPOC, and we're going to push down into the 63 and possibly all the way down into the next big target below down here at 1248, 1247, 1250 area. If we can hold the 75, I'm looking for them to chop here and base and continue to move up with the key target above at 83 and then 93, 91, 93. I mean, nothing. The last 4 days has been the same. All right, nothing's changing on gold, but we're doing a pretty darn good so far of holding this composite VPOC at the 75, 76 area. Anyway, I know that's a long one. As always, trade well, trade safe, and we'll catch you on the flip side.